In the space of less than 2 months, NIO's stock price has doubled. I mean, NIO is basically trading at junk value 2 months ago. Junk value. People are pricing in the reality that there was a very high probability NIO would go bankrupt. That's the truth. You don't believe that? Well, why did NIO's stock price fall from $60 down to $3? $3, yeah? And now, in 7 weeks, the stock price has suddenly doubled. In the last couple of days, it's accelerated by 40%. What exactly is going on at NIO? Well, here's the thing. Morgan Stanley says even though the stock price has just doubled, you still should buy the stock. I don't agree personally, but here's what Morgan Stanley are saying. Hello, my friends. Welcome to the channel. I'm Sam Evans. You're watching the Electric Viking. It's great to have you with us. So, NIO, you can see here their stock price. If you look at the chart over the last 5 years, it looks terrible. It looks like nothing's happened. But if you actually zoom in and you look at it over the last 6 months, you'll see that NIO stock is rebounding in a very big way. And I'm a little baffled by this. Why has there been a 90% rally in the last 60 days? Well, for one, Morgan Stanley is predicting a record sales for NIO in Q3 based on the order backlog for their Onvo L90 SUV, which is actually very well priced, very, very well priced. So it's doing quite well. The investment bank expects NIO to give guidance of 78,000 deliveries to 80,000 for Q3, which would be not great, but still an improvement of 8.3 to 11% growth on a quarter-on-quarter basis. NIO reported 72,000 to 75,000 deliveries in Q2. It still puts them on track, though, to deliver probably just about 350,000 cars for the year, which isn't terrible, but considering the amount of losses we're seeing from NIO on a quarterly basis, you're talking at like an average of about $1 billion in terms of losses per quarter in some quarters. In others, it might be 800 million, but it's very large sums. And we're talking, losses of $12 billion over the past 6 years. I don't fully understand where Morgan Stanley is coming from. So I had a look and sort of deep dive into this and to try and see what's going on. Well, here's the thing. Analysts expect revenue of around $19.5 billion US. Well, here's the thing. Analysts expect revenue of around 19.5 to 20.1 billion renminbi, which is obviously Chinese dollars. That's around 2.7 to 2.9 billion US dollars. That would be year-over-year growth of 20%. And that's here's what Morgan Stanley said. That's a stark difference in growth compared to its American counterpart Tesla, which saw an 11.7% decline in revenue year over year. But it's still only about 10% of Tesla's revenue. Unlike Tesla, NIO is deep in the red. In 2024, the company saw a net loss of 3.15 billion, with a net margin of minus 34.5%. However, Morgan Stanley expects the Q3 net loss to narrow to around 770 million US dollars. To me, that doesn't sound particularly good, but that is an improvement considering it was 950 million in Q1. The company spends heavily on R&D towards building its own, Morgan Stanley is saying building its own autonomous vehicles. And the truth is NIO hasn't really focused on autonomous vehicles. So I'm a bit confused, Morgan Stanley, on why you've said that. The reality is they focus heavily on investing in swapping stations. They build a lot of these. That's a big expenditure. And on building new models. And they do have some pretty good cars, I've got to say. In Q1, the company reported R&D expenses of 3.18 billion yuan, which is about 440 million US dollars. That explains nearly half of its net loss for Q1. Now, in a new research note sent out on Monday, obtained by Price Target, Morgan Stanley said the stock has already risen more than 90% from its June trough, far outpacing the 9% gain of Hong Kong's Hang Seng Index. The analyst from Morgan Stanley said the firm's checks suggest NIO ES8 pre-orders placed with a refundable about $1,000 US deposit may have surpassed 30,000 and are continuing to increase. Yeah, while real demand will depend on order conversion, because these orders are based on refundable deposits, analysts said that constructive feedback is reinforcing the market's belief that the model could, well, this particular car could go viral, as Onvo's L90 SUV did last month, potentially supporting a monthly run rate of 40,000 to 50,000 vehicles for NIO Group from October. So if NIO is delivering 40 to 50,000 vehicles every month from October onwards, October, November, December, then it's possible the stock could go up again. Does that mean NIO is out of the woods? Of course not. It's got to start making a profit and stop losing so much money. And let's be honest, the truth is that's the time of year when the Chinese car market goes ballistic and everyone's selling a lot of cars at that time of year. It's true. Analysts also pointed to what they described as benign fund flow, with NIO's trading value climbing above $2.5 billion in the past two sessions, equivalent to the cumulative value of the prior 2 weeks. In other words, there's a lot more interest lately in investing into NIO. Investor sentiment has shifted, said analysts, with a sharp decline in client inquiries on NIO's underlying demand and execution risk, and increased attention to the upcoming L60, the NIO L60, and the L80 facelifts, both expected early next year. The L60 was launched in May 2024, with deliveries beginning in September. The L80, which is the 5-seat version of the L90 SUV, it's planned to be unveiled in the fourth quarter of this year. So that's basically the reason why Morgan Stanley is saying they recommend buying NIO stock, because demand for their current EVs is increasing. And I don't argue with that. I think that's very valid. However, if it were me, I'd say there's still a huge risk with NIO. I mean, even the CEO himself said only a few days ago they're in a battle to survive. I think you've got a lot less risk with companies like Geely, Zeekr, Xpeng, BYD, Leap Motor, Li Auto. To me, for my take, I'd feel a lot more comfortable investing in one of them. Now, I should mention to you, I did own NIO stock a couple of years ago, and I got burnt pretty badly, along with a lot of other people. Am I influenced by that in my observations here? I don't think so. To be honest, I didn't hold a huge amount of money in NIO, and I'd say it didn't really emotionally bother me. For some reason, I'm not really that connected to the idea of money itself. If I make losses, it doesn't particularly emotionally bother me. I don't know why. Same thing with gains, though. To be honest, when I've made gains, I don't go, oh, great, wow, let's go celebrate. I'm just, okay, it is what it is. So I don't believe that's affecting my opinion here, or at least my video. But guys, I'm curious, what are your thoughts here? Do you agree? Do you disagree? Let me know in the comments. Bye-bye.